Alphabet's earnings came out a few hours ago, and the market didn't really react very positively. As I'm recording, shares are down about 5% in after hours trading. Now, that doesn't always stick the following day, so we'll see what the market does in trading tomorrow. But I want to give some initial thoughts on what we saw from Alphabet because there were some positives, there were some negatives, but a lot of the reaction is really based on what analysts were expecting from the quarter. And I think investors need to take a step back and think about what we should really be expecting from Alphabet and from Google in particular at this point in time. Should we be expecting 10, 20% growth from the search engine? What should we be expecting from the cloud? Because I think with that context in mind, the results were really positive. So that's what I want to dig into. This is a stock that I bought recently, and these results actually make me more bullish on the stock going forward. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, you'll get their top 10 stocks to buy right now. So let's go to the release, and then I'm going to show some charts to give a little bit of context to some of the most important numbers long term. This is the earnings release, and this is the high level numbers right at the top. This is the quarterly numbers on the left and the year-end numbers on the right, and these read left to right. Still drives me nuts that that's not standardized, but just to give some context on what's going on here. Revenue for the quarter was $86.3 million. That was up 13% from a year ago. Same thing on a constant currency basis. So 13% growth for a company the size of Alphabet is really, really phenomenal. Operating income, $23.7 billion, up 27% from a year ago. Again, sounds really phenomenal. Overall, on the bottom line, $20.7 billion worth of net income, which is $1.64 per share. For the full year, $73.8 billion in net income, $5.80 per share. So just a very, very high level look. Massive company trading for 28, 29 times earnings, and the growth numbers are really solid. At a very, very high level, I don't have a lot of bones to pick with Alphabet here. I think the numbers look really good, but let's dig into exactly what results looked like, particularly in search and the cloud. Alphabet breaks their business down into these components. There's these advertising revenue segments. So that includes Google Search, YouTube Ads, and the Google Network. You can see that search was up really nicely from $42.6 billion to $48 billion in the most recent quarter. YouTube bounced back really nicely, up $1.2 billion to $9.2 billion in revenue. And network revenue was down slightly. So overall, you get about a $9.5 billion increase in revenue to $65.5 billion. This is where analysts were actually expecting even more growth. So this is one of the reasons that the stock is down, is because this wasn't as good as expected. But I don't think that this is a bad quarter by any stretch for Alphabet. And I'll put some context behind that in just a second when we zoom back to the quarterly trends. The one that I was really watching this quarter was the cloud. Cloud is where you're going to have not only their cloud hosting services, but also a lot of the growth in their artificial intelligence revenue. And this is where there's been a lot of growth on the top line, but that hasn't translated to the bottom line. So $9.2 billion in revenue for the quarter. But now if we go down here just a little bit, they do break out cloud operating income, and that has now transitioned to being positive. I believe this is the fourth straight quarter that they've had positive operating income from the cloud. And this is the best quarter by far, $864 million worth of operating income. And those margins are trending higher. So revenue continues to grow at a really rapid rate and margins are improving. That's exactly what you want to see. This is also operating income from cloud services, from Google services. Remember, this is all of those services before. They don't break out YouTube specifically, although they should. So this was up $5.5 billion to $26.7 billion. So again, I think a lot to like from both of the major components of the business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, this is such a massive company that you could quibble about a number here or there on the margins, but I think the general trend for search is that search is not being destroyed by artificial intelligence. That's the first question that I think we need to get out of the way. And we need to keep an eye on this, but search continues to grow, and I think that's a positive sign. YouTube was also very strong. I think YouTube has an opportunity to become an absolute juggernaut in the media business because it's the one place where you don't have acquisition costs that are going to go up along with your subscriber base. This is creators uploading content, and then Alphabet is matching advertising revenue with those creators. So it's the one place that if you want to upload content, you can't do that on Disney Plus or Max or on Amazon. So YouTube is the one place for the kind of content that I'm creating right now. And if advertisers are spending more on a platform like that, that's going to be positive for everyone in that ecosystem. And I think that just gives YouTube a more and more powerful position to get into adjacent markets. YouTube TV, the deal that they have now with the NFL. I think we'll see media rights become a bigger and bigger deal for YouTube going forward. So that entire business, the advertising business, is very strong for Alphabet. And I want to put this into a little bit of context with a chart that sort of pulls back on the revenue segment. This is the quarterly operating income for Google services. And what you see here is consistent growth through December 2021. And then this dip happens at the same time. Two things happen. Apple institutes app tracking transparency, so basically breaks the tie between iPhone users and when they're spending money. So this makes advertising a little bit less effective until you learn how to adapt your advertising and your targeting. This took a little while for Alphabet, for companies like Meta. So you see this dip in advertising, and then at this time, companies were also pulling back as well. So those two things hit at kind of the same time, and that's why you had this drop in operating income. Remember, operating income is going to be leveraged to revenue. So now you start to see these numbers move higher in the second half of 2023. And this is happening at the same time that all these threats are supposedly coming from artificial intelligence. So I think this is a positive sign for Alphabet's business long-term because this is where a vast majority of the money is made. The other component that I'm watching, especially for future growth, is the cloud services. This is a look at cloud services revenue and operating income. And I only pulled the numbers back to December 2021, and these are quarterly numbers. But you can see that there's just a steady drumbeat of growth. But not only is there growth, growth is accelerating. So Google Cloud is picking up their rate of growth in the most recent quarter after growing $500 million per quarter or less than that for really the last year. There was now $780 million worth of growth in that segment. And that money is now starting to flow to the bottom line. Now, we need to see those margins improve. Most of their cloud competitors have much better margins than less than 10%. But this is really a positive sign for Alphabet's ambitions, both in the cloud and in artificial intelligence. If they can become one of the leaders in artificial intelligence and they have the GPUs and the compute power to do that, I think this will be a huge tailwind for the company long term. So this isn't going to be a business that's going to be the size of search anytime soon, but you need to find that next growth avenue. And I think this is it with Google Cloud. And I think the trends are positive. Now, maybe investors are a little bit disappointed with how fast money's flowing to the bottom line, how quickly those margins are improving. But I think Alphabet is heading in the right direction. And that's really what you want to see for this company. So right now, Alphabet stock trading for a little over 26 times earnings. That's before any impact that may happen in trading on Wednesday. So maybe the deal will be even better than that. And so this is a company growing at double digits. You're seeing a lot of leverage to the bottom line. I think the search business is very solid. That's going to continue being a cash cow. YouTube's in a great position, and the cloud is starting to emerge as a future profit driver. So this is one of the big tech stocks that I think is very attractive right now. This isn't like Apple where you're getting a stock for 30 times earning. There's no growth. There is still growth here for Alphabet. I'm a little bit confused as to why the market was disappointed by this result. I think the results are really positive. I think Alphabet's doing all the things that I want to see as an investor. If shares dip over the next couple of days, I'm happy to buy more because I don't think Alphabet is going to go anywhere anytime soon. But what do you think after these results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.